Hi guys. So I'm gonna be waiting for people to tune in before I start, waiting for a few minutes for people to tune in. Do let me know how you're doing, where you are in the world, how you've weathered the crash that we happened yesterday. If you managed to survive it, say hi in the chat, tell me how you're doing. And we will probably be starting in about 5 to 10 minutes, depending on how fast viewers enter this stream. And this stream is going to be super exciting. I'm looking forward to it. This is a spontaneous stream. Do let me know if you can hear and see me perfectly fine. Make sure to leave a like so that more people can find the videos. All right, to see there's a little bit more viewers. That's pretty awesome, pretty awesome. Do leave some likes. Let me know where you're tuning in from. And I'll definitely be repeating this part at the beginning for a few minutes. But this video is going to be super exciting because I'll be looking at some graphs and why I believe the current crash is an important part of this cycle and why I believe it's also going to continue in a similar fashion to the 2017 bull run. So this is going to be extremely exciting, and I feel like everyone that managed to hodl through this crash is set up for fantastic gains in the next few months. This is going to be really, really cool video. I'll definitely be editing out the most important parts and uploading it as a separate video afterwards. But in this live stream, you're going to be able to ask some questions if you've got some stuff that is on your mind and you're worried about. If you're panicking and you're wondering if this was the end of this crash, feel free to ask it in this video. We'll also be looking at some charts at the end of the video, but the bulk of the video is going to be looking at the charts, looking at how this crash actually set us up for a potential repeat of the 2017 bull run. But do make sure to smash those likes. Only see 2 likes at the moment to help this video reach a broader audience. Oh, Sasha Burger, hi there. Really happy to have you in the chat. Hope you're doing well. Xeno, bot designer, hi. Everything's fine. Everything is pumping right now. Marcos, yes, definitely. Definitely. Anyone that got in yesterday has, yeah, they made some fantastic gains and also recovered potential losses. If the market dipped and your portfolio lost quite a lot of money yesterday, you should be up by around 40% as a lot of things recovered. This is pretty cool, pretty cool. So let's wait a few more minutes for people to tune in before we get into the bulk of the video. Mitchell Jones here from the US. I guess you just woke up. Glad to have you on the channel. And yeah, I think we're in a very exciting time. It must have been pretty chilling yesterday. See your portfolio drop 30-40%, and yeah, dealing with the emotions associated with that. The Xenobot, be aware of the Richard D. Wyckoff method. They play the same manipulation as 2017. This is a bull trap. Going to be interesting to see if you believe that's a bull trap. Going to be interesting to see. If you're bullish on the whole cryptocurrency space, yeah. Before the huge, bigger crash, don't let them fool you. To be honest, I don't try and time the market. I'm in the market for a longer period of time. If you're fearful, maybe cryptocurrency is not for you. Better sell now and buy back lower. Me personally, I abide by the philosophy of timing the market is probably not the best strategy. Time in the market is the better strategy for gains, and like having a strategy and planning your exit is possibly the best way to get some profits in this bull run. But yeah, let's see who's right. Let's see who's right. But don't fall into the idea that this yeah, like these scenarios that everything's going to crash very often, like the fund can dig deep. It's possible that it pans out. It's possible that it doesn't pan out. To be honest, I'm not too worried. If it crashes even lower, then basically it's another opportunity to buy the dip for me because I'm in it for the long run. I feel like it's very dangerous to fall into the trap of the fund that gets spread. Now, of course, it's possible, but very often the fund that gets spread never really pans out the way that one wants to. Um, I've seen the videos talking about the Wyckoff method and so on, but the danger about that is that whales actually also know that, and then they kind of try to trap people following different strategies. But yeah, I mean, like if it follows through, that's pretty awesome. But I think it's also important to realize that not everything is following anymore in the steps of Bitcoin as it used to. So this might apply to Bitcoin, but many of the altcoins that I'm holding have actually performed way better compared to Bitcoin. They're starting to decouple, so that's pretty interesting. Gee, Kaimak, will we see a bigger dip this weekend? Most of the time, everything is crashing in the weekend. Well, I don't know. I mean, like, I'm not an oracle. I cannot tell you what's going to happen. The great thing is that the market has recovered quite a bit, and we'll be looking at support. So there's definitely a possibility that the market crashes even more. I don't think it's going to crash as violently as it did yesterday, but yeah, I mean, like, I'm here to be surprised. I'm here to be surprised. I hope it doesn't crash, of course. In the long term, I believe the market's going to go up. And as you can see with previous charts of previous cycles, you had massive corrections. But in the long run, if you hodl and you just take your profits, you're going to be profitable. Doesn't really matter where you bought. I mean, like even if you bought at the top of the 2017 bull run, now of course not all coins managed to pull through the bear market, you would be profitable now. Like with BTC, ETH, ADA, you'd be now in the green. Doesn't really matter where you bought in the last bull run. And many coins experience 40-50% crashes. And if you don't let your emotions take control over your actions, then you're probably going to be a profitable cryptocurrency investor. If you buy into the fund and try and time the market, the likelihood that your portfolio is going to suffer due to your trades, unless you're a professional trader, and even with professional traders, very often it's the hodlers that make the most gains, and the traders, they actually get trapped. So yeah, so we've got a few viewers, and I think we can dive into the meat of this video, and that is why I believe this crash is the perfect setup for a repeat of the 2017 bull run. During the 2017 bull run, Bitcoin experienced numerous 30, 35, 40% crashes on the way up to the euphoria stage. And if we look at the blow off top at the moment and compare it with the blow off top of previous bull runs, we're going to see that at the moment, we don't really have a blow off top, which would signify that we actually reached the euphoria stage. So I don't believe we have reached this euphoria stage for Bitcoin. Now, of course, now I'm using Bitcoin as a representation of the market because many of the other cryptocurrencies are correlated with Bitcoin, even though I feel like a lot now are slowly starting to decouple from Bitcoin. I feel like it's a very good metric, and yeah, to compare Bitcoin with the whole cryptocurrency market. So in front of us, we've got the different bull runs from way back in the early days, 2009 to 2010. And as you can see, all of them had like euphoria stages at the end of the cryptocurrency bull run, where the price skyrocketed like a few 100% in the last few days of that cycle. The second bull run was between 2012 and 2013, lasted 373 days. The 2016 to 2018, which is also known as the 2017 bull run, was 525 days. Now you might see here one pattern, and that is that the cycles are always getting longer. So the gains per bull run is diminishing, of course, because the cryptocurrency market is going way higher in terms of valuation. So that means the gains are decreasing. However, the cycles are becoming longer and longer. What that means is that the current bull run is probably going to be somewhere around, I don't know, 650 days. And at the moment, we're only at 375 days. So we probably got another 300 days of bull run left. Yeah, and that's pretty cool. So if you look at the gains from this green line, which is the current bull run of 2020-21, you can see here, I don't see that as a blow off top. So we haven't even reached the euphoria stage. So another 2-3x for Bitcoin. This bull run is, in my opinion, possible from the highs. So that would place us at around 160K to a peak of maybe 200K per BTC during this bull run. And that will happen within the next 300 days. However, you have to realize that during this time span, a lot of things can happen. The price of Bitcoin could drop down to 20K. That's a possibility. And you have to see that as an opportunity to maybe buy the dip. Dollar cost averaging out is the best thing for you to do, because trying to time the bottoms is very difficult to do. Trying to time the tops is also very difficult to do. So now I'd like to show you a few charts, but credit is where credit is due. And this chart I'm going to show you is from this Reddit user, fan of Hacking Sexy Days, and I like to give him credit for these charts. I think it's pretty fantastic. So here we've got the July 2017 bull run with a 35% crash. Now the crashes, I count them based on the candle close and not the wick. So if we take the wick, it's probably a 45% correction, but with just the candle close, it's a 35% correction. So in July 2017, we experienced a 35% crash that brought Bitcoin down to the $1,925 range. So people were talking about Bitcoin being dead, Bitcoin going to zero, it's a bull trap, blah, 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 and stuff like that. However, July 2017 is pretty early in the 2017 bull run. Of course, it's like the last part of the 2017 bull run. Bitcoin would do another 10x from these lows. Pretty awesome. Now, if we look at the current bull run, May 2021, we've got a 40% crash. Now, the price did drop down to around 29,000. However, like I just said, that is the wick. And I consider the candle close to be where I'm actually calculating this crash. So we've got a 40% crash. And this is pretty interesting. Now, of course, you can always compare current market with previous markets, but I think it's pretty nice, and it's nice to speculate on what the outcome for this bull run is going to be. Now, of course, there's no certainty that all of this is going to pan out like I believe it will, but time in the market always beats it. So in the end, if I just stay in longer, at some point I'll be profitable because I believe in this technology. Yeah. If we superimpose both of these charts from 2017 and 2020 or 2021, this is really interesting. This looks very similar to each other. And we know how the story goes for the 2017 bull run. It brings us up to 19,000 US dollars in a matter of 4 or 5 months later. Now, with the lengthening of the cycles, I believe this top is probably going to be sometime like maybe May next year, because the cycles are going longer, and the peak is probably going to be sometime next year. And we're probably going to have one peak this year, another correction, and then it will continue up, because the market always moves in cycles. You've got smaller cycles, you've got longer cycles. Some cycles go just a few days, some cycles go a few weeks, and you're going to have a period where it's just going to have green candles every day, and you're going to have a few maybe days or weeks of red candles, and that's the moments where you can actually start accumulating. Now, you shouldn't accumulate, of course, all the way up, because at some point you're going to have to take profits. Well, I mean, that's perfect. I mean, if you can trade that pattern, then I looking forward to you talking about your gains. I'm really looking forward to that. I mean, like, it's perfect. Me personally, I don't really trade too much. I trade a little bit, but I've made the most profit just dollar cost averaging in and dollar cost averaging out. Now, the last thing I'd like to share with you, and that's pretty cool, and that is these bands. I think the easiest way to look at the current market is by going onto the website, look into the bitcoin.com and using the golden ratio multiplier. We at the moment are at the current band. If we go and take this segment, as I just mentioned, we didn't have any blow off peaks, and we didn't even touch anywhere close to this upper band, which would signify that we reached a peak of the bull run. So now we're close to this blue band, and we dropped all the way down to this band, which would actually indicate a pretty good accumulation range. And yeah, see us targeting these upper bands, which would bring us to 80K probably in the next 2 to 3 months. And then afterwards, at the end of the year to next year, we'll be targeting the range between 82,000 and 136,000. However, the longer we trade sideways, the higher this upper band will go and probably bring us up to 160K. Now, this is just looking at Bitcoin. To be fair with you guys, my largest holdings are not Bitcoin. I like the idea of Bitcoin. However, me personally, I'm holding way more ETH and way more Cardano, and they have also fared pretty well during this crash. Now, of course, ETH has dropped by a significant amount. However, it did have a massive rally before that. And I'm also following the theory that ETH and other smart contract blockchains are going to decouple from Bitcoin, meaning that the correlation between the assets, smart contract blockchain assets with Bitcoin is going to be lower than it just was over the last few years. And the reason for that is Bitcoin fulfills one use case, and that is being a store of value. And I think it's a fantastic use case. There's no better use case in store of value as such. However, smart contract blockchains, you've got Ethereum, Solana, Cardano, with the smart contracts coming out in August, Ethereum with a thriving DeFi space, they're actually a multi-use case blockchain, meaning that they can give a lot more to the economy. They're basically the massive economy, and Bitcoin is the gold in the banks of that economy. And that's why I believe, me personally, that over the next 5 years, we're going to see a lot of smart contract blockchains actually outperforming Bitcoin in terms of returns. So on the charts, if we look at the daily, let's have a look at Bitcoin. It's not looking as bullish as other charts for other cryptocurrencies. So I like to use the Ichimoku cloud, which actually shows that we just broke below the cloud. And this is not the most bullish thing to happen on the daily. So the short-term trend for Bitcoin is not that great for the next 2 to 3 weeks. We're going to have to be able to break above the cloud again to enter into bullish territory for the daily time frame. Now, if we look at the weekly time frame, it's not looking too bad. We actually broke below several supports on the weekly. We broke below the 46,000 US dollar support. However, Bitcoin managed to break above or stay above the 35,000 US dollar support. So on the weekly, it's not looking too bad. That's like the midterm trend. It's still looking pretty good, but really depends on how this weekly candle is going to close. It's possible that Bitcoin trades between 35,000 and 46,000 over the next 2 weeks. And I really hope it manages to stay above this 35,000 support. If it breaks below this 35,000 US dollar support, it's very likely that we drop all the way down to $22,000. And that would be a very good accumulation range if you're holding. Now, I don't recommend trying to sell and buy back lower. That's also a very difficult strategy to do. However, if you're dollar cost averaging into the market, maybe consider buying some in this area here. Basically, anything in this area is probably a good accumulation range. Pretty awesome. Now, if we look at ETH USD, that's actually looking pretty good, even despite the correction that we had. It's actually looking a lot more bullish than Bitcoin. And I think the fundamentals behind Ethereum is a lot stronger than Bitcoin at the moment. Ethereum also had a crazy gain over the last few months, even since last year. So it's increased in value in relation to Bitcoin by a lot. So on the weekly, we're bullish. We're above the two support lines of $2,797 as well as $2,300. So this would be a pretty good accumulation range should the price drop down to these levels. And it is possible because very often you get a double bottom at a support line. So at the moment, we're going to have to see how this weekly candle closes, but it's possible that the price drops down slightly below this yellow box. So if you want to place some limit orders, that might be a good place to do it. Now, what is also pretty cool is if we look at the daily candles, we're actually still above this blue cloud, which means that on the daily time frame, Ethereum is still bullish. This is pretty good. The only thing that I'm not too happy about is that ETH is below these two support lines. These are now acting as a resistance. So the thing that I actually see for ETH for the next few days, I'd say for the next 2 weeks, is ETH actually trying to break above these resistance lines. So at $3,113 and $3,276. So these are the two resistance lines that ETH is going to be tackling in the next 2 weeks. Let me find my drawing too. So what I probably want to see is something like this, trying to tackle these resistance lines and then possibly going higher, tackling the previous all-time high of $4,152, and then we'll walk towards $5,000. Now, the reason why I'm pretty bullish on ETH is that there are massive updates coming towards the Ethereum blockchain in July this year. We've got the London hard fork, which brings the EIP 1559 improvement, and this should reduce the gas fees on Ethereum by quite a lot. Then at the end of the year, we've got the quick merge, which brings proof of work to proof of stake. And all of these are updates to make the Ethereum blockchain a lot more scalable, a lot cheaper, reduce the gas fees and so on. So you've got a thriving DeFi ecosystem on the Ethereum blockchain. However, the barriers to entry are pretty high for people with low funds due to the high gas fees. So all of these updates make Ethereum better, and the better Ethereum gets, the more people are going to use the dApps, and to use the dApps, they're going to have to buy ETH, and that will bring the price higher. And that's why, in my opinion, Ethereum, among many other smart contract blockchains, is poised to actually flip the Bitcoin market cap in the next few years, because it brings a lot more use cases to the table than just acting as a store of value. Self-nifty, ETH sucks. With that mentality, you will not thrive in the crypto space. You have to have an open mind with different cryptocurrencies, and it just shows that you're probably not open-minded in your life as well. So definitely change your mentality, otherwise you will not survive the cryptocurrency space. Putting other cryptocurrency projects down will not pump your bags. All right, let's continue with ADA USD. Pretty bullish on ADA. There are a lot of things, updates that are happening to the Cardano ecosystem that I'm really looking forward to. So first of all, let's look at the charts. On the weekly, it's looking really bullish. We've got this massive wick, and kudos to people that managed to buy the dip yesterday as the ADA price dropped all the way down to 92 cents on Binance. So anyone that had some limit buy orders here, like hats off to you. You really deserved it. And this candle is actually looking really bullish. So I hope that this candle here closes above the support line of $1.76. And that would be pretty bullish. Now for the Cardano ecosystem, I'm really excited about everything that's coming onto Cardano in terms of DeFi projects. The smart contract should launch July, August of this year. Very bullish about that. And I'm pretty sure that's going to be a catalyst for even more growth for the ADA asset, but also for any kind of projects that are running on the Cardano ecosystem. For the daily, it's also looking really crispy. Very nice price action. So here we actually broke above the support line, $1.71. And I really want this candle here to close above these support lines. So we've got the blue candle and the red candle, and they're actually converging together. I definitely don't want the blue candle to break below the red candle. I just want this candle here to close above $1.72. Then that's going to be really nice. And we can see other candles possibly moving towards this $2.29 range. So this is looking really good. Cardano is looking very bullish, especially when looking at other smart contract blockchains at the moment. Cardano price action is looking really nice and poised for even more gains. Double view carpet cleaning. Hey Kierin, do you still like Aave? I really like Aave. Now, don't get me wrong. Me personally, I'm not invested in the Aave token, but I really like the Aave platform. I use the Aave platform to earn high interest fees. Now, as a disclaimer, I am being sponsored by Aave. However, I was using the Aave DApp even before they started sponsoring me. And I really like the Aave platform that is running on Polygon. So you can actually earn some super high interest rates on Polygon without having to spend like high amounts of fees to deposit funds onto Aave. But really, I'm a big fan of Aave, and it's going to be part of my exit strategy. With a part of my profits, I'm actually going to put them into stable coins and find different ways to earn passive income. And Aave is one way that I'm going to do that. So I'm probably going to put some money into USDC on Aave, as well as some DAI onto Aave. And I'm going to, yeah, that's about it. So yeah, I'm pretty happy about Aave. Now the token, I'm not investing in the token. I used to have the token. Unfortunately, I sold it way too early. I think I sold it at around $120. But I did make a good profit on it. And yeah, I might look at it again now that it dipped quite a bit. The thing is, Aave is a fantastic platform, earning like massive amounts of fees. So I don't really see the price going anywhere but up. Yeah, but I'm not holding any Aave tokens at the moment, as a disclaimer. But yeah, the charts are looking pretty good on the daily. It's also breaking above this support, $478. And it's above the cloud, and you've got a lot more buying volume here. This is really bullish, so this is pretty good. Lay Taylor, thanks to you. I didn't even feel the need to drink 1 or 2 beers yesterday. Well, that's good. Happy that I could lift your spirits, and hopefully your portfolio is looking way better today than it did yesterday. You're probably back up 40% since lows of yesterday, maybe even back in profit, maybe not, or let's say probably still down to your portfolio all-time high from maybe 3-4 days ago, but I believe we're going to catch up those lost gains in a matter of just a few days. So back to Aave, it's looking really good. The daily is still in a bullish trend. We're above the cloud. That's the easiest signal to show that the trend is still bullish. I just keep on hodling and wait for new highs and make sure that you exit your position. Yeah, and take some profits. Taking profits is really important. As you realized what can happen in a matter of just a few hours, your gains can dwindle away. So if you haven't already, make sure you watch this video of mine. Kierin, let's see if I can find it. take profits. This is a really important video. I don't really see many people talking about this. This is one that I made 1 year ago, and this is an updated one with a lot more information. I highly recommend that you watch this video. It's got timestamps. It's pretty long, 16 minutes. And make sure that you actually look at that, because not a lot of people actually take profits or think about taking profits. And I cannot stress this enough. Most people are probably going to be wrecked during the bear market because they never really thought about how they're going to take profits during this bull run. Hodling for 10 years is possible, but I prefer to then buy back during the bear market with a certain amount of cash. Yeah, let's have a look at Matic. I'm a pretty big fan of the Matic token. It's given some pretty good gains. And at the moment it's called Polygon. They rebranded to Polygon. I think it's still called Matic on TradingView, unfortunately. Let's have a look on Binance. This is looking really good, very good. The basic rule for using the Ichimoku cloud is that you should always follow the trend. Do not try and trade against the trend. As long as the trend is bullish, you should only be hodling. And Matic is looking really, really bullish. The trend is above, the price charts are above the cloud, which means it's really bullish. And the thing is, with the Matic token, it's probably going to follow the same footsteps as ETH. On the Polygon blockchain, which is a layer 2, it's pretty cool. You can actually transact and use DeFi with low fees and high transactions per second. I've also made a few videos talking about different dApps on Polygon. And the thing is, like, in order to use the Polygon network, you're going to have to buy Matic tokens. So it's like the fuel that you have to put into a car in order to run the car. So not only are you investing into the growth of the platform in terms of users, but you're basically buying the fuel and then maybe at some point selling this fuel to other people that want to use the Polygon project. However, yeah, with everything, always invest at your own risk. You've always got a risk that you buy a certain top and it drops and then it continues. So yeah, just be careful with that. And if you've already been in the Matic token for a long time, make sure that you actually take some profits and diversify your portfolio. Portfolio diversification is really important because that means that you can always gain from some pumps and then put it into tokens that haven't pumped yet and then just diversify. So for example, if Matic does like a 3x in the matter of a few hours or days, there's very often a correction that happens afterwards. So like taking like 10% of profit and then maybe putting it into ETH or ADA or other coins that you've got and then distributing it, you're going to have the best possible average return for your portfolio. So I know that some people have had crazy returns on their portfolios, and I'm definitely not the best there, but I think my portfolio since the last year has done 3,390% returns. So I'm pretty happy with that. And that outpaced the cryptocurrency market. I think the cryptocurrency market just did, I think, around 800%. And yeah. So I'm pretty happy with that. Diversifying, not being married to a certain token is a good strategy. Be married to your portfolio and not just one certain token. Don't try and go all in into one token. Make sure you've got certain hedges. If one token or project should fail, another one should basically go up. So on one hand, Aave Cardano is my ETH hedge and ETH is my Cardano hedge and so on. Even though I believe both are going to go up. It's like a kind of security, safety. That's basically what a hedge is. So yeah. If you've got any questions, do let me know. Otherwise, I'll be closing the stream soon. Hope you enjoyed this video. Hope it gave you a little bit more clarity in what is happening with the market. Don't believe the hype, the FUD. Maybe stay away from social media, Reddit, where everyone is going like, oh, this is the end of this bull run, blah, 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 blah. Accept how the cryptocurrencies markets are. If you cannot stomach 40% losses, you don't deserve 1000% gains. That's basically it. These corrections are going to separate the real chads from the paper-handed weaklings. But yeah, it's going to be interesting to see how this is going to continue. Yeah. So I don't see any questions, so I'm going to close the stream. Hope you enjoy the rest of your day, and I'll catch you in the next one. Have a good one. Bye-bye.